Jason. I'm excited to be back here for another episode of Direct Credit Funding with Jason. We're going to talk about a few things today, but we're going to keep this specific episode about the benefits and the pros and cons of working with your local bank or your Bank of America, your Wells Fargo, your big banks, as they call it in the world, versus working with a financial services company such as myself here at Direct Credit Funding. So when you go to your big banks, they're going to be looking for you to provide a lot of information. One of the big negatives of working with the local bank, of working with big banks, they're going to want all of your application, they're going to want everything on your application. They're going to expect you to be 3 or 5 years in business. They're going to expect excellent credit, and by excellent credit, probably a 700 plus credit, if not probably a 720 plus credit. The big thing that the banks are going to want is they're going to want a full tax return. They're going to want a full financial package on your business. They're going to want to see year-to-date financials, 2 years tax returns that are profitable. If you're showing losses, they're not going to lend you a dime. And we all know in this medium and small size business that most of the businesses that we work with, we're not trying to show a profit. We're trying to write everything off because we don't like to pay taxes. And that's the nature of small and medium sized businesses. Is they don't always show a profit when they're in their growth stage. Banks don't like that, just flat out. Banks want you to be a perfect customer that comes in the door, that they don't have any questions. They're going to look through all your history. They're going to look through all your partners' histories. They're going to want to see your personal net worth. They're going to want to see your personal tax returns. The big benefit is coming to a specialized financial partner, such as my company or other companies that do what we do, is we make this process a lot more seamless for you. We have what's called a small ticket side, which is for smaller transactions. And by smaller, I mean transactions under $500,000. And we are not going to be looking for that, your tax returns. We're going to look at very minimal information. We are going to look at your credit. We're going to look at how long you've been in business, but we're not necessarily going to look at your bank statements. We don't have to know that you're profitable on paper. We need to know that you know how to pay your bills. We expect that you know how to pay your bills because that's what a responsible business owner does. As a specialty finance source, such as here at Direct Credit Funding for your equipment financing needs, we are going to look at much more limited information. We're going to look at how long you've been in business. We're going to look at your credit score. We're going to look at your business credit score to see how you pay other lenders that you've borrowed money from. We're probably going to ask to see your 3 months bank statements because we are looking that you have some cash flow running through your business. And then we're going to evaluate how much money we can lend you. We have quite a few customers that come in for maybe $200,000, $300,000 that definitely don't have the cash flow to qualify for that under standard lending guidelines with a standard funding source or with a standard bank. However, what we can do is we can take that, we can analyze that and determine, hey, you know what? You're actually looking to buy 2 or 3 pieces of equipment. Maybe you need 3 $100,000 pieces of equipment or 2 $50,000 pieces of equipment, and you don't qualify for that full finance amount under normal traditional means. We can spread that risk over multiple funding sources and still accomplish that full ask of the money that you're looking for. And we break it into smaller portions that are more palatable. And we can break that into 2 or 3 different transactions and get your funding accomplished that way. And that's part of the magic of dealing with a specialized funding source like myself is we know, especially with how long I've been in business, going on 28 years now, we know which banks are going to consider you for your situation. Say you have a prior bankruptcy. That's something that a lot of banks won't consider. We happen to know through our funding partners which one of our partners will consider a funding source, a prior bankruptcy. We have a partner that will consider someone that that has a criminal record, for example. There are banks that won't deal with you if you have a criminal record. That's something we can consider. We can deal with you if you've been historically losing money, but you finally have turned the corner and you're suddenly profitable now. These are all things that we offer in the specialty finance sector that the banks don't. Another thing that we do offer that most traditional banks do is what's called a sale leaseback. And that's where you're taking equipment that you already own free and clear, and we take and leverage that equipment and get you financing for it and borrow money against that equipment that you already own free and clear. So that's definitely something that a specialty lender such as myself offers that other funding partners don't offer out there. We also offer quite a bit in flexibility of terms. As a general rule, banks and traditional finance companies do not offer 100% financing. They're looking for you to put anywhere from 10 to 20% down on an equipment purchase. Here at our company, Direct Credit Funding, we do 100% financing. That's probably something I don't really talk about enough because it's just so normal in my world. But when you're looking to make an equipment acquisition to add to your business, that equipment that you're purchasing is going to add revenue to your business. That's why you're buying it, is to add revenue to your business. And you don't want to put the big capital outlay to buy this equipment. We offer 100% financing. We'll do maybe one payment or 0 payments due at signing, and we'll finance that over anywhere between a 24 and a 60 month. And honestly, we can go to 72 and 84 months depending on the equipment type. We're going to talk about that in probably our next video, is some specialty programs that we're lending up to $750,000 application only with no financials. So that's going to be for a very specific topic in one of our next videos. But we offer flexible terms and 100% financing that you won't get with a traditional banking source. So again, that saves your capital. It allows you to put your equipment to work right away. Start, put that in, get that equipment delivered, start producing income before you even have to make a payment on it. So we can do deferred payments. Say it's going to take you 2 or 3 months to get the equipment up and running. We'll set you up on a deferred payment program where you have your first 3 payments at $99. I think that's a pretty good deal. That should allow you enough time to get that equipment in action, start producing money, start getting paid from whoever you're doing the work for, so that you can make the payments and continue to grow your business. That's something that the traditional finance companies and big banks don't offer that we offer in the specialty finance sector. The big benefit of working with a specialty finance company is creative financing. What I pride myself on doing is we say no when other places say yes. When your banks say no, we are generally going to be an option to get you approved when other places say no. We've got the creativity, we've got the time in business, we know how to understand your business and have a conversation with you. We actually have a customer right now. It's a firearms manufacturer, which very few financial institutions will even do. Firearms manufacturer. They've been definitely struggling with their payments. They've been paying slow for past couple of years. However, they finally have turned the corner and started to have some substantial profitability. It's going to take some special structure. We're going to need a little bit of down payment. We're going to take some equipment that they own free and clear as additional collateral, but we're going to get them $2 million to accommodate their growth curve because they've doubled their revenue from last year to this year. They're already at last year's revenue now. They're planning on doubling by the end of year, but yet no one's been able to offer them money because of their pay history in the past where they've been paying everybody really slow. We're able to understand their trajectory. We're seeing the orders coming in. We're seeing the growth pattern that they're on. We've got a little bit of, in their case, we're going to take the additional collateral of the equipment that they already own free and clear, and we're going to allow them and we're going to lend them $2 million on a new loan here before end of year, so they can have the advantage of the depreciation. They can start placing these orders, and they're actually not even going to make their first payment until January of next year. So that is some of the creative benefits that we offer in our space that other financial institutions don't offer. So this is Jason with Direct Credit Funding. You should give us a call. Let us look at your situation and see how we can help you. You can reach me at the website at www.directcreditfunding.com. I'm sure there's buttons all around here telling you like and subscribe to the channel. If you want to hear more, give us a call and drop us a line and hit the like and comment sections below.